Well, my next guest puts out a weekly letter of commentaries, global markets, addresses economic and technical trends, both long-term and short-term perspectives. And joining me now is the editor-in-chief of the Kobeissi letter, Adam Kobeissi. Adam, a few hours ago, I saw you put out a tweet. It really caught my attention. I want to ask you about it. You're saying that as we look ahead to December Fed meeting, the case for a sustained rally in stocks remains for now. Bulls continue to control the near term as the Fed pivot narrative strengthens. We may be setting up for one of the largest buy the rumor, sell the news events ever. That got my attention. What are you talking about?
Hey, Charles, thanks for having me back. Yeah, so we've, ever since the November Fed meeting, it was all up in the air. Is the Fed going to pivot or are they not? And we kind of took the camp that they would pivot, especially after this, the November CPI, we got October CPI showed inflation down to 7.7%. And since then, we've seen this euphoric rally in stocks and all these, bonds and even gold. And we think that that rally is set to continue into the December 14th Fed meeting because, as we've seen with all the other Fed meetings this year, the decision is basically priced in ahead of time. And then once that meeting, commences, we expect the Fed to, probably raise 50 basis points and hint to maybe even a slowdown into 2023. But ultimately, they're going to keep on the table that they'd rather over-tighten than under-tighten because they don't want inflation to become entrenched in the economy right now.
It's interesting because as you say that, everyone's sort of bracing for the exact opposite. So you're setting yourself apart. And it kind of reminds me of a tweet that you put out last week. And I want to share this with the folks. The market has become more polarizing than ever before. Gone are the days of simply playing to the levels to both directions. Traders are now labeled as bulls or bears. The best traders play both sides of the trade without emotions. That's exactly what we strive to do every day. You sound like a guy, like a 50, 70-year-old man. I mean, what are you talking about, the old days? But you make a great point. You make a great point. You got to be bullish or bearish. I mean, what's going on here? What do you think that's all about? Why can't we just let the markets dictate how we feel?
Yeah, I mean, I think markets have just become incredibly polarized because we had this whole debate, are we in a recession? And there's a whole debate about what is the Fed going to do? What's going to happen with the economy? So there's so many huge topics that are kind of at a pivotal point right now. But those, as we do every day, those traders that are kind of able to play both directions, this market has been incredibly profitable. This year we played the downside, we played this relief bounce, and we're seeing 10 to 20% moves in the S&P 500 on a month or two basis. That's historic volatility, and for traders, volatility is opportunity. The more volatility you have, the more money you can really make in this market. And we're urging our subscribers and our Twitter followers to just stay objective, don't get emotional when you're trading, and trade both sides of this play because there's a lot of opportunity out there.
I went over this with Gary Kaltbaum yesterday too. I think even long-term investors are going to have to be a little bit more nimble because you got to take what the market gives you. One thing that you liked also, I know you're bearish on bond yields, bullish on bonds or TLT. And I'm looking at this chart, and I think you're onto something, my man. Look at that chart. Look, so we're kind of breaking out that downtrend. We're turning up here. This looks really, really attractive to me. So this means, though, that yields have to come down. You're expecting, do you think bond yields have peaked?
Yeah, so I mean, we've been bullish of TLT for some time now, for the last few weeks, and this is kind of this buy the rumor, sell the news type of thing as well. We saw TLT at one of the most oversold technical levels in history going into the November Fed meeting, and we think that the rally can continue towards 108, even 110 in that ETF, and from there we'll probably see a pullback. The Fed will come out and say we're slowing rate hikes, but we still want to remain hawkish. We're going to go from hawkish to less hawkish. So we think a sustained rally over the short term is certainly possible. Over the medium to long term, we do expect more pressure on TLT and gold. Okay. Just because we are in a higher rate environment.
So right now, again, I mean, you're talking about a move up to here, not bad percentage-wise, and then maybe, again, the continuing trend. I was hoping you were telling me we're off to the races, but we'll take what the market gives us. I think that's the common theme that you laid out for us. Adam, thanks a lot, my friend. I appreciate it.
Yep. Thank you. Thanks for having me.
See you real